What's up, YouTube? This is Alex with Prospera Trading. Today we're exploring a popular option strategy on Robinhood, selling puts. We'll use Disney as our example with a strike price of $85 and an expiration date of August 18th. Selling puts can be an excellent way to earn income and potentially acquire shares at a discount. So let's dive in and explore how to execute this strategy effectively. First thing, let's clarify what selling put entails. When you sell a put option, you're committing to buy Disney stock at an agreed upon strike price. It could be $85 in our case, or any strike price that you choose, depending on your risk tolerance. If that falls below the $85 by August 18th, in exchange for taking on this obligation, you'll receive a premium upfront. And it is important to note that the premium is yours. It's yours to keep whether the option is exercised or not. As you can see on the right-hand side, we have our premium. It goes up as we take on more risk. We are looking at the $85 strike price, which will give us a premium of $134. But before we proceed, we'll have to analyze. Well, I would suggest analyzing Disney's current situation. In this case, we'll take a look at recent stock performance, upcoming events that may influence the stock price, and any relevant news in the entertainment industry in this case. And understanding the company's position will help us make informed decisions on selling puts. And you should do this with whatever stock you want to sell a put in. Got to do your due diligence and mitigate your risk. So we'll discuss the advantages of this strategy with Disney as our example. By selling put, you can potentially generate income by collecting the premium. Furthermore, if Disney stock remains above $85 by the expiration date, you keep the premium without having to buy the shares. It's a smart way to participate in Disney's potential upside without owning the stock outright. As with any investment, there are many risks involved. We'll explore risks when selling puts on Disney and discuss mitigation strategy. This includes setting a stop loss level, diversifying your option portfolio, and understanding the potential consequences if the stock drops significantly. So, we're going to move on to the exciting part and executing a trade on Robinhood. And I'll walk through with you guys how to sell a put. In our case, we will go to trade an option. This is going to be your expiration date, and it goes out really far out till December 19th, 2025. But in our case, in our situation, I typically like to go out 30 days or a month. But I sold my puts July 14th. With the expiration date of August 18th. And I got the strike price of $85. So at the time, if we take a look here, July 14th, Disney was at around $88. Yeah. So we had a bit higher premium. I believe I had a 250 premium at that time. Just because we were further out than now. But if you take a look, if we view all the options, we sell a put, we go down to the strike price of $85, and we'll still get a premium of $134. So basically, we're committing to buy 300 shares, depending how many contracts you want to buy. If you set one contract, you're getting a premium of $134, and you are committing to buy 100 shares of Disney at $85, that's why you see a max loss of 8,366. So one of the things I will look at when selling a put would be, like I discussed earlier, is looking at how the stock of any company that you choose has been moving. In the last week, Disney is up 2.33%. On the last month, we're down 0.57%. And if we look further out, Disney has been falling 33% in the last 3 months, and year to date we're down 0.31%. So the reason I would want to look out, especially on the 1 year chart, would be to look at the resistance and the support lines. As we can see here, Disney had a 52-week low of $84.17, and we've had support recently at the $85.36, which is why I bought Disney at the strike price of $85. So once you place the trade, it's essential to monitor its progress and how to track its performance, and consider closing the position early, depending on how to manage your potential risk, and you have to adjust based on the market conditions. If Disney just all of a sudden falls, there's always that risk. But that is why I would do my due diligence and look at the support lines. We see that the 52-week low is $84.17, and there has been pretty strong significance heading down below $86. So we could also take a look at recent news. There is the actors and writers strike that's going on, as well as new news that Bob Iger has brought back other like previous executives that have helped Disney. So it'll definitely bring some stability back to Disney. But they've also have some I don't know if you guys have heard, but the issues in Florida with Governor Ron DeSantis. But you have to definitely do your due diligence with any stock. Take a look at the risks and see how the stock might move. Any insight that you can get will definitely give you a good, you got to give yourself reasons not to and reasons to sell this put. And then adjust from there, mitigate whether it's worth the risk. So at the moment, if you sell a put at the $85 mark, you still get $134. And this will be within about 17 days from today, from when I'm recording. So you will get pretty much a passive income of $134 as long as Disney does not fall below $85 mark. As you can see here, the premium, as long as Disney stays above that $85 mark, we'll be able to keep the $134 in profit, which is our premium, and we'll also be able to keep any shares of Disney that we had. But mainly it's we're looking at the premium. That's our main passive income that we're looking at here. If Disney starts falling below $85, we start losing that premium value until we get to $83.66. So as you guys could recall, the 52-week low was $84.17. So in order for us to lose money, we have to fall below that and then break even lower, which in my situation, it would be fine. And this could depend on you. I would want to buy Disney at this price. If it falls below $83, I would be fine buying Disney at $85. So I will have that obligation of buying, that $8,000 of Disney stock, which is fine with me. I definitely am long-term on Disney, which is why I would suggest whenever you're looking at a stock to sell a put in, perhaps look into stocks that are running near 52-week lows. So as you can see here, General Mills might be another option. We could look at the 52-week line, and we'll take a look down. The 52-week low is $73.70, which we are hovering around that. We're at $74.59 for General Mills, $74.31, $75.11, and also $74.35. So in that case, we could probably trade option. And like I said, I would probably go out a month. In this case, we could probably go to September 15th. And our support line was at 74. So we could possibly go out to, let's see. We'll go out to sell a put. And we'll go out to 74. If we go down to 67.30, I would feel comfortable here. We would get a $15 premium. Here we would get a $35 premium, and here we'll get an $80 premium. Definitely depends up to you how much risk you have. But if you want to take more, more of a premium, you'll have to buy whatever stock you choose at the certain price, but you'll get that premium. But yeah, you could take a look at the 52-week low, and I would definitely do your due diligence. It's not financial advice of, what stocks to choose and buy. It's just how to maneuver Robinhood and take a look at, the puts that I would do and how to make a little bit more passive income. So in my situation, August 18th is the expiration date with that $85 strike price. I believe at that time I had a $255 premium, and I bought 3 contracts, so probably making about around $700, something like that. But that's pretty much it. That's selling puts on Robinhood. We use Disney as our example, but I would want to remind you guys that option trading always involves risks, so it's essential to do your research, stay informed, and practice sound risk management. I hope you guys enjoyed the video and found it helpful. Please give a thumbs up and consider subscribing for more valuable content. Thank you for watching, and happy trading. If you guys have any questions or want to share your experiences on selling puts on Robinhood, drop a comment below, and don't forget to hit that notification bell so you won't miss any future videos. Until next time, stay safe and trade smart.